What if the silver sitting quietly in your safe, your drawer, or your investment account is about to become one of the most valuable assets on Earth? What if the world suddenly realizes there simply is not enough physical silver left to meet exploding demand? And what if the people who prepared early are the only ones protected when the financial system begins to crack under pressure? Welcome back to Pulse of Silver, the channel where we uncover the biggest stories shaping the future of silver, wealth, and the global economy. Today, we are diving into a bold and shocking warning connected to Mike Maloney and the growing belief that silver may not just rise in price, it could become practically priceless in the years ahead. Some analysts are now talking about a possible 50x move in silver, and while that sounds unbelievable to many people, the reasons behind this theory are becoming harder to ignore every single day. For decades, silver has been treated like an afterthought by the mainstream financial world. Investors have chased stocks, real estate, crypto, and technology companies, while silver remained one of the most undervalued hard assets on the planet. But beneath the surface, something important has been changing. The world is consuming silver at a pace never seen before. Unlike gold, which is mostly stored and recycled, silver is heavily used in industry. It is used in solar panels, electric vehicles, medical equipment, military technology, electronics, batteries, and artificial intelligence systems. Modern life depends on silver more than most people realize. At the same time, mining supply has struggled to keep up. Many silver mines are producing less metal while new discoveries remain limited. It now takes years, sometimes more than a decade, to open new mining projects. This creates a dangerous situation where demand continues rising while supply remains trapped. Mike Maloney has warned for years that silver's true value has been hidden by paper markets and financial manipulation. According to this view, the actual amount of physical silver available is far smaller than investors believe. What makes this situation even more serious is the growing distrust in fiat currencies around the world. Governments continue printing enormous amounts of money to support debt-heavy economies. Central banks are trapped between inflation and recession fears. People are starting to notice that their purchasing power keeps falling even when official numbers claim inflation is under control. Food prices, energy costs, housing expenses, and insurance payments continue climbing. This loss of confidence pushes more investors toward hard assets like gold and silver. Now imagine what happens if large institutions, governments, or ordinary investors suddenly rush to buy physical silver all at once. The paper silver market may show millions of ounces available, but many analysts argue those ounces do not actually exist in physical form. If enough buyers demand delivery instead of paper contracts, the market could face a major supply shock. That is where the idea of priceless silver begins to enter the conversation. In a real shortage, price discovery changes completely. Sellers stop caring about old price targets because replacement supply becomes impossible to find. Mike Maloney believes we are entering a historic financial reset. In his view, silver is not simply another commodity trade. It represents protection against currency destruction and financial instability. Throughout history, when trust in paper money weakens, precious metals tend to reprice dramatically. And because silver is both monetary and industrial, it may have even more upside potential than gold during the next major economic cycle. The question is no longer whether silver has value. The real question is whether the world is finally about to realize how valuable it truly is. One of the biggest reasons analysts like Mike Maloney believe silver could explode higher is because the current market structure looks increasingly unstable. Most people think silver prices are determined naturally through supply and demand, but the reality is far more complicated. The majority of silver trading happens in paper markets where contracts are bought and sold electronically. These contracts represent silver on paper, but many investors never take physical delivery. As a result, enormous amounts of silver can trade without actual metal changing hands. This system works smoothly only as long as confidence remains intact. But what happens if confidence disappears? What happens if investors begin demanding real bars and coins instead of digital promises? That is the fear growing inside the precious metals community. Some analysts believe there are hundreds of paper claims for every single ounce of real silver available. If true, this means the market is operating on a fragile foundation. Over the past few years, we have already seen signs of stress. Silver inventories at major exchanges have faced pressure while physical premiums on coins and bars occasionally surged far above spot prices. During periods of panic buying, local dealers struggled to maintain inventory. Delivery times increased, and investors discovered that physical silver was much harder to obtain than expected. This disconnect between paper prices and physical availability has raised serious questions about how accurate the official silver price really is. At the same time, industrial demand continues growing rapidly. The green energy revolution alone requires enormous quantities of silver. Solar technology is becoming one of the largest consumers of silver worldwide because the metal is highly conductive and difficult to replace. Electric vehicles use significantly more silver than traditional gasoline-powered cars. Advanced electronics, military systems, and AI infrastructure also require silver in large quantities. This means silver demand is no longer dependent only on investors. Industry itself is competing for supply. Now combine this rising industrial demand with global economic uncertainty. Central banks are buying gold at record levels while debt burdens continue climbing worldwide. The financial system depends on cheap money and low interest rates, yet inflation pressures remain stubborn. Governments may eventually respond with even more money printing to stabilize economies. Historically, that environment tends to benefit precious metals dramatically. Mike Maloney often points to historical cycles where financial excess eventually leads to hard asset repricing. In previous monetary crises, gold and silver did not simply rise gradually, they moved violently higher in short periods of time. Silver especially has a history of extreme volatility because the market is relatively small. It does not take massive capital flows to move silver prices significantly. If institutional investors begin allocating even a small percentage of their portfolios into physical silver, supply could tighten very quickly. The idea of silver rising 50 times may sound impossible today, but many assets that experienced explosive moves once seemed impossible too. Technology stocks, real estate booms, cryptocurrency rallies, all looked unrealistic before they happened. The difference with silver is that it combines industrial necessity with monetary history. It is not driven only by speculation. It is tied directly to energy systems, manufacturing, and financial confidence itself. This is why some investors are no longer looking at silver as a short-term trade. They are treating it as strategic insurance for a world entering a period of major economic change. If the paper market loses credibility and physical shortages become obvious, silver prices may move in ways most people are completely unprepared for. So how could silver realistically move 50 times higher from current levels? To understand this argument, we need to look beyond normal market thinking. Most people assume prices move slowly and predictably, but during financial resets, assets can reprice extremely fast. Mike Maloney and other precious metals analysts believe silver may eventually experience this type of revaluation because the current price does not reflect true scarcity or monetary risk. First, consider the historical relationship between gold and silver. For thousands of years, the gold-to-silver ratio remained much lower than it is today. In ancient monetary systems, silver was often valued at around 1/10 to 1/15 the price of gold. Today, the ratio remains far above historical norms. Many analysts believe silver is massively undervalued relative to gold. If gold continues rising during economic instability and silver merely returns closer to historical ratios, silver prices could rise dramatically. But the bullish case goes even further. Silver inventories above ground are shrinking while industrial consumption keeps growing. Unlike gold, which is mostly preserved, much of the world's silver gets consumed in products and becomes difficult or expensive to recover. That means silver is disappearing from available supply over time. Some experts even argue there may now be less investment-grade silver available than gold in certain forms. Now imagine a scenario where inflation accelerates while confidence in fiat currencies weakens sharply. Investors who previously ignored silver could suddenly rush into the market seeking protection. At the same time, industries dependent on silver would continue buying regardless of price because they need the metal to manufacture products. This creates a potential bidding war between investors and industry. The silver market is relatively tiny compared to stocks, bonds, or real estate. A small shift in global capital flows could overwhelm available supply very quickly. If pension funds, hedge funds, or sovereign wealth funds decide they need exposure to physical silver, there may simply not be enough metal available at current prices. In that situation, price becomes whatever sellers demand. Mike Maloney has often described silver as one of the most asymmetric opportunities in the financial world. In other words, the downside may be limited compared to the potential upside if the monetary system enters crisis mode. During previous bull markets, silver has already demonstrated explosive behavior. In the 1970s, silver rose thousands of percent within a decade. That move happened in a much different industrial environment than today. Now, demand drivers are even stronger. The priceless argument is not necessarily about silver literally having no price. It refers to a situation where people no longer want to exchange physical silver for weakening paper currencies. If inflation destroys purchasing power rapidly enough, holders of hard assets may become extremely reluctant to sell. In that environment, silver becomes more than an investment. It becomes preserved purchasing power. Another important factor is public psychology. Right now, most ordinary people still pay very little attention to silver. Mainstream financial media rarely discusses it seriously. But markets often move the most before the crowd arrives. Once headlines begin reporting shortages, surging prices, and financial instability, public interest could explode overnight. By then, available supply may already be gone. This is why long-term silver investors remain patient despite years of volatility. They believe the market is approaching a breaking point where suppressed prices can no longer continue. Whether the final move is 10x, 20x, or even 50x, the core argument remains the same. Silver is historically undervalued in a world facing historic financial pressures. One of the biggest mistakes investors make is assuming financial systems change slowly. History shows the opposite is often true. Economic problems build quietly for years, and then suddenly everything changes at once. Mike Maloney believes we may be approaching that kind of turning point right now. The conditions supporting silver are no longer isolated events. They are happening simultaneously across the global economy. Inflation continues hurting consumers even when official reports suggest it is cooling. People feel the pressure every day through rising food prices, higher rent, expensive healthcare, and increasing energy costs. Governments around the world are carrying enormous debt loads that may never realistically be repaid under the current system. Central banks are trapped in a difficult position. If they keep interest rates high, economies weaken and debt problems grow worse. If they cut rates and print more money, inflation could surge again. Either path creates instability. This matters because precious metals historically perform well when trust in financial systems begins to decline. Gold has already attracted significant attention from central banks globally. Many countries are increasing gold reserves as protection against currency risks and geopolitical uncertainty. Silver often follows gold during major precious metals bull markets, but because the silver market is smaller, its moves tend to be far more dramatic. At the same time, geopolitical tensions continue increasing around the world. Trade wars, sanctions, supply chain disruptions, and conflicts between major powers are reshaping global commerce. These disruptions can affect mining production, metal transportation, and industrial manufacturing. Any major interruption in silver supply could trigger panic buying very quickly. Another major factor is the rise of renewable energy infrastructure. Governments and corporations are investing heavily in solar technology and electrification. Silver remains one of the most important materials in these systems because of its unmatched conductivity. Even if silver prices rise sharply, industries may still need to buy it because alternatives are less efficient. This creates a unique situation where higher prices may not immediately destroy demand. Meanwhile, younger investors are starting to question traditional financial advice. Many people watched banks fail, inflation surge, and currency purchasing power collapse over recent years. This has created renewed interest in hard assets outside the conventional financial system. Physical silver appeals to many investors because it is tangible, historically recognized as money, and accessible compared to gold. Mike Maloney also emphasizes the psychological shift that can occur once momentum changes. Markets often remain ignored for years before suddenly becoming popular. Once silver breaks through major price levels, media coverage could increase dramatically. Fear of missing out may pull millions of new buyers into the market. In a small market with tight supply, this kind of emotional buying can create extraordinary price spikes. There is also growing awareness about the difference between owning physical silver and owning paper silver products. During stable periods, many investors are comfortable holding ETFs or futures contracts. But during periods of uncertainty, some investors may prefer direct ownership of coins and bars. If large numbers of people seek physical delivery simultaneously, pressure on inventories could intensify rapidly. The reason some analysts warn silver could become priceless is because confidence itself may become the real issue. In a world where paper currencies lose credibility and debt levels spiral out of control, tangible assets gain strategic importance. Silver is not just a commodity. It is a monetary metal with thousands of years of history behind it. If the financial system enters a true crisis period, silver may no longer be valued the way it is today. It could be viewed as essential financial protection. The silver market may be entering one of the most important periods in modern financial history. Mike Maloney's warning about silver becoming priceless is not based on fantasy alone. It is based on growing industrial demand, shrinking supply, rising global debt, inflation pressures, and weakening confidence in fiat currencies. Whether silver ultimately rises 5 times, 10 times, or even 50 times, the forces building beneath the surface are becoming harder to ignore. What makes silver unique is that it sits at the intersection of industry and money. The modern world needs silver for technology, energy systems, electronics, and manufacturing, yet investors also view it as a store of value during uncertain times. Very few assets have both characteristics at once. This combination creates the possibility for extreme price movements if supply shortages and financial instability occur together. At the same time, it is important to stay realistic and emotionally balanced. Silver is known for volatility. Prices can rise sharply and fall sharply within short periods. Markets do not move in straight lines, and no prediction is guaranteed. Even strong long-term trends experience corrections, fear, manipulation claims, and sudden shifts in sentiment. Investors should always avoid making emotional decisions based purely on excitement or fear. The most important lesson from analysts like Mike Maloney is not necessarily about chasing a specific price target. It is about understanding the larger financial picture. Around the world, people are beginning to question the sustainability of endless debt creation, currency expansion, and financial instability. Precious metals represent one possible response to those concerns. For many investors, silver is less about getting rich quickly and more about protecting purchasing power over time. If the silver market truly faces a future supply crisis, the people who prepared early may benefit the most. By the time mainstream attention fully arrives, physical supply could already be difficult to obtain. History has shown that markets often move before the majority understands what is happening. That is why long-term investors continue watching silver closely despite years of frustration and volatility. Thank you for watching Pulse of Silver. If you enjoyed this analysis, make sure to subscribe, turn on notifications, and stay connected because the silver story is evolving faster than ever. The next few years could reshape the entire precious metals market, and we will be here covering every major development along the way. This video is for educational and entertainment purposes only and should not be considered financial advice. The opinions discussed in this video are based on market analysis, historical trends, and public information available at the time of recording. Investing in silver, gold, mining stocks, or any financial asset involves risk, and prices can move unpredictably. Always do your own research and consider speaking with a qualified financial advisor before making investment decisions. Never invest money you cannot afford to lose.